Hello, everybody. I'm back from holidays and ready to jump back into property. Whilst I've been away, there's been some really interesting data coming out, and I want to point to you this one article which encapsulates everything that we've been talking about for the last 6 to 9 months. Check it out. CBA record immigration to drive house prices higher. CBA has upgraded its house price forecast due to the unprecedented surge in immigration and ongoing supply shortages. Now, this is not necessarily new data, but it's interesting to see the major banks now catching wind of this and upgrading how they see the house prices moving. In May, they forecast the national house prices by 3% in 2023 and a further 5% in 2024. However, the pace of gains has already exceeded expectations, and this is due to the lack of new listings on the market, tight rental markets, and strong population growth. It's back to, as we always talk about, supply and demand. When you've got very low supply and high demand, prices move. Now, the reason why there's been such negative sentiment is because we've had 13 or 14 rate rises now. That's pulled some of the demand out of the market, and we have seen isolated incidences, particularly in the mortgage belts, where there's been high pressure, a lot of negative press. People have had to sell, but there hasn't been as much distress selling as people have anticipated. Reason why we're talking about this is because we want to buy real estate when the market is soft, and then we want to hold on to it so the market can, whilst the market is growing. Here we go. As a result, May forecast has already been met this year. The gains for the calendar year up to August is 4.7%. So far, the Australian property market has moved almost 5%. Some areas have moved faster than others. As we've seen, Sydney is typically the price leader in this instance, followed closely by Brisbane and some of the other major cities. What they've said here, given the current momentum in the market, we've revised the price update. They think that the market's going to end at about 7% across Australia. That makes a lot of sense. Okay, dwelling price index. Here we're talking about the prices moving, and yes, indeed, I agree with this analysis. They expect a 5% gain in 2024, so next year, giving a total peak to trough from the bottom to the top of 5%, 10%, which we've seen here. Now, I don't want to just quickly move past this because, if we take the industry average growth of 5%, if you've got $1 million property, that's $50,000 gain in your pocket. $500,000 property, it's $25,000. This is not a small amount of growth. Now, that's the average. And as you can see, each city has different projected growth rates. See, in Sydney, it grew by about 10%. It expects 4% next year. I think that's wrong. It's probably going to grow by more. Melbourne, 5%, Brisbane, 6%, Perth, 5%, Australia-wide, 5%. I think this is actually pretty modest, and the fact that it's made up as an average of, between 4 to 6% for the high performing cities, there are going to be market leaders, and then there's going to be the people that are the sub-markets, the suburbs that will perform not as well. Now I'm going to dive into why that's important in a second. Much of the drivers of house prices have come from levels of supply, and new listings, total advertised stock has been well below the decade average. Now, we will see an uptick in listings as the spring selling season comes about, but we don't anticipate that to be huge. Now, this is a really interesting graph, dwelling stock and population. That red line there, that is population growth. That blue line is dwelling stock. And as you can see here, we had that fall in population as a result of COVID. A lot of people left. And look at this. We are going to see a huge amount of people coming into the country just in time for the amount of stock coming off. Now, the reason why the amount of stock coming onto the market is quite low is for a few things. One, councils have been generally quite slow allowing for approvals to come through to the market, particularly in Sydney. Melbourne and Brisbane, it's a little easier to go and get a development application and something built. The second thing has been build costs and issues with builders. A lot of builders have gone bankrupt. There's still quite a little bit of fear in the market as a result of a huge spike in building prices. A lot of builders suffered. A lot of people couldn't get houses built. They couldn't do their renovations. And you couldn't get apartments completed and townhouses completed. So this is one of those reasons why there's a huge turnoff in the amount of stock coming onto the market. Now, just looking at this, that's demand, that's supply. When you've got low levels of supply and high demand, that's when we see that price growth. In two main places as well. It's price growth in the property value, but then price growth in the rental values as well. Okay, this is happening all whilst this is a consumer sentiment survey. Whilst consumer sentiment is at an all-time low, at the same levels, in fact a little lower than the way we were feeling in 2008. So post GFC, there was a lot of negative sentiment in the market. People were scared to get into the market, rightfully so. And that's that same level of fear now. Post GFC, the market ran. There was a number of reasons why the market ran. It was due to in some areas, lots of investments in infrastructure. There was a population run. There was equity capital freed up, so interest rates came down, so it was easier to go buy property. Now, this, in my mind, is one of those interesting things where quite literally it's a negative sentiment out there. People don't really want to be buying property. We've got low levels of supply for the foreseeable future and a huge amount of people coming into the country. So quite literally over the next 24 to 36 months, we will see a uptick in the prices of property. So now is a good time to getting out there, negotiating for either your own home or an investment, but putting real estate into your portfolio is the big message of today. So yeah, it's a quick article, but it's a goodie. There's lots of great data in here. If you want to read it for yourself, you can find it over at Macro Business. There is the URL. We'll put it in the link as well. Otherwise, happy investing. If you've got questions, reach out to myself or the team. I'm happy house hunting, and I'll catch you all later.